Good evening, everybody. Looks like we got a great full house again here tonight.
Nice. Oh yeah, perfect. Here we go. So welcome everybody. We got a lot of people coming in now. We're gonna have a full house here. So now that everybody's jumping on, just let's test this chat box out, make sure that this is all working. Everybody can see us, everybody can hear us. If anybody can't hear or see the screen, let me know. Or if you can see it, let us know that you can see it too, so we know everything's working good. And we got perfect. Thank you. So we're just after 7 here. I'm gonna let a couple more people file in here before we get started, but there's a lot of stuff that we're gonna cover in the next hour here. So we are gonna be moving fairly quickly through this all, but the good thing is it is recorded. Everything is going to be sent to you guys after, most likely tomorrow. You guys are going to see an email with the recording of it. So if you do miss anything or have to leave and come back or recap anything, you're going to be able to get a chance to rewatch this. So yeah, don't worry if you got to run out for anything. Utilize the chat as much as you can, because like I said, we're going to go through a lot of information, a lot of stuff. We don't really have a lot of time to sit and answer every single question, but one of us is going to be on the chat all the time, answering, monitoring. But at the very end of this, by about 8 o'clock, we're going to hang around for however long you guys want, answering questions and things like that too. So if we don't get to it during the webinar, we are going to get to it at the end. So don't worry about that. Thanks everybody for being here. I appreciate taking time out of your Thursday evening, even though I don't think it's very enjoyable sitting on the back deck or anything like that, because it is howling winds out there these days. Yeah, we got over 30 people. So I think it's a good time to get rolling on this anyways. Like I said, if you guys got to come in or out, it is recorded. We're gonna have a link out to you guys tomorrow for this anyways. So yeah, let's open this up a little bit. So the first thing is, when you guys signed up, and again, I appreciate it for signing up just to take time out of your evening for this. I did say in the first message that was sent out that you are going to get something like a book on the buying, like a buying guide and the condensed version of the buying guide. So that is true. This is the book. It's a complete guide to buying a home. I've developed this over the last year or so, and it will come to you guys in a electronic version. It's you can read it on your phone, tablet, computer, wherever. It's all free to you guys, plus a condensed buyer's guide that kind of recaps everything here in a short form, so you guys can see that and recap it as well. So that's going to be coming at you guys again tomorrow, and hopefully you enjoy that. So yeah, so getting into this, as a first-time home buyer, for the majority of us, it's going to be the most expensive purchase you're going to make almost your whole life, really. So a lot of this, especially now with the media and the way we hear everything on social media, the TV, all that stuff, where interest rates and low inventory market and all that is really creating a little bit of stress for everybody, especially first-time buyers. And no matter what, we're going to feel this just because it's normal, it's natural. But what Ryan and I have done with this and working together for well over a year or two for sure together as a team, our goal is to alleviate all that in buying a home, whether it's your first one, second one, third one, fifth one, whatever. We're here to help and make it not so stressful. Literally hold hands for you the whole process from start to finish. That's the goal for us. It's been doing very well for us. So that being said, we're going to get into some introductions so you know exactly who it is that's talking to you throughout this whole thing, so you know that we kind of have somewhat of an idea of what we're talking about. So mainly, I'm Andy Goddard. I'm a realtor with eXp Realty. I've been doing this for the last couple of years at least, I think since 2021. I've helped many satisfied buyers and sellers all around Saskatoon and surrounding areas. I say Saskatoon and surrounding areas because that's where I call my main hub of business. I live in Warman myself, so that's why I kind of stick around this area. It's where I call home. It's where my family calls home. But I am licensed in all of Saskatchewan, so I can help anywhere in this province. And I was born and raised Saskatchewan, so this is home for me my entire life. And it makes me happy to bring people in here, and other people call Saskatchewan home. I've been in Warman itself since 2016. It's where my wife and I got married, where we had both our kids, our son and our daughter. It's just a great place to be. So we're really excited about it. I love doing this, love helping people call us home as well. So I'm going to put a quick link down here. Actually, I'm going to throw two links in the chat here. The first link is a Linktree address. It's got all my social media accounts, both personal and business. So you can follow everything, see what I'm doing, see who I am as a person. But also there is a booking link in there. I should have put it in before, but I kind of forgot about it. So I'm going to put that in there. The booking link for you guys is if you want to book a one-on-one call with us to either get the process started, to get more personal information, talk more on a one-on-one setting, that is going to be your best friend because it connects my calendar and it shows you exactly what time is available to have a one-on-one talk with you. So I'm going to keep putting that in there, so don't worry if you lose it. So now with real estate, unless you have cash to buy a home, which majority of us don't, we have to go through the traditional way, which is getting a mortgage. Without one or the other, it doesn't work anywhere. And like I said, I've teamed up with Ryan for the last couple of years. He's been fantastic for me. He's handled majority of my business. I don't trust anybody more than him with sending any buyers to him for their mortgage and financing. So I'm going to pass it off to Ryan, let him introduce who he is. So go ahead, Ryan, take it away.
Good evening, everybody. Thanks, Andy. Yeah, we really promote that team dynamic here with Andy and I. I am the financial guru that handles the mortgage side, and Andy is the absolute real estate expert handling the property side. And we want to make sure that we're covering all your bases. Really, that one stop shop approach, and really working through the entire process from a team dynamic. So my name is Ryan. I work with TMG, the mortgage group here in Saskatoon. I am Saskatoon born and raised. I've been here for my entire life. I've been a mortgage broker and in the mortgage industry for over 20 years, almost 25 years. So that dates me a little bit, but I've been doing this a long time and one of the pioneers in the mortgage industry here in Saskatoon. I have a wonderful wife of almost 30 years and two wonderful adult children, and we love to call Saskatoon home. Now, as Andy mentioned, we are located in the Saskatoon and surrounding area, but that does not mean that we cannot help you if you are looking for something throughout the province. So, even if you're in surrounding areas, maybe in that Humboldt, Kindersley, market, or if you're in another center like Prince Albert, so Current, Regina, anything in the province, we can help you out with that. So don't be afraid that just because we are not located somewhere else in the province that we can't help you with that transaction financially and with the property as well. A couple of things that I did want to point out. You've probably seen the chat function rolling along here. Please use that chat function for any questions that you do have along the process. What we typically find is that if you do have some sort of a question that is pertaining to what we're going through, if we can get that answered quickly and efficiently for you, there's likely three or four other people that are wondering that same question. So please feel free to use that chat. Please put any questions in that chat, and one of us will be monitoring it along the way to get those answers for you. It's probably going to be me most of the way, so feel free to use that chat as well. And as Andy mentioned, we do have that booking link that's going to be popping up throughout the presentation in that chat box. What we really want to have happen here is we're going to give you a bunch of general information on the home buying process and the mortgage process, but each situation is going to be uniquely different to you. So as much as the information is going to be fairly general, you are likely going to have some pretty specific questions on your individual situation. Maybe it's an income, you're worried about maybe a new job. Maybe you're fairly new to the country and you're worried about how that process goes. So clicking on that booking link gets you one-on-one time with Andy and I right out of the gate. And that's really our goal, is to speak to you individually and start that process to walk along with you, along your mortgage journey and your home buying journey. So click that link as we go along, and you can connect with us one-on-one. All right, Annie, let's get this rolling. Back to you.
Awesome. Thanks, Ron. I appreciate it. So that's us in a nutshell. Team Andy, Team Ryan, we're here to help with everything from the start to finish. So now we're going to get into everything about it. I'm going to go over this next one here. I honestly could sit on this slide for hours going over every single thing about the buying process, each one of these little notes, but we don't have that much time. So it's just going to be a generalized rundown of the entire process from start to finish. So you kind of know how it works. And then we're going to kind of dig into a little bit of them, just some basic stuff to just get a start of the buying process. And then, you know, one-on-one calls, whatever, working together, either way, we go through the whole process together and explain everything. So the first steps to buying a home, whether you're new to Canada, whether you're renting, whether you never bought a home before and you're still living at home and you want to get your own place, this is a great start, is learning what you can about it and what you need to do to at least get your start. The very most important thing when it comes to buying a home is getting a pre-approval with a mortgage broker, much like Ryan. The reason for that being, there's a few reasons why this is important. Number one, we are in a very, very low inventory market, which means there's not a lot of property for sale for the amount of buyers we have. So we need to be as competitive as we can. And the first step is getting a pre-approval. That just shows when we write an offer that you already have financing in place. We just need a live offer to take it home. Okay. The second most important, and arguably the most important part of a pre-approval, is it tells you how much you can afford. That is the biggest thing, because we need to know what your range of affordability is and how we can find you the best property in your range, right? There's nothing worse than looking at $500,000-$600,000 properties and then find out you're approved for 450, 350, right? It's hard to come back from that. So we need to figure what that number is and find you the best for that amount. So once we have that in place, all the financing is good to go. I get the green light to continue on with the next steps. The next step is starting the house hunt, finding what you want, what you can afford, and what fits you. So usually we sit down, have another one-on-one call session, whatever, and we figure out what kind of property fits you. Do you need a detached house? Do you have a lot of vehicles, kids, pets, whatever? Are you more of a person that likes to travel and needs something that has less maintenance, like a condo, where you can take off and not worry about the maintenance on the outside? We go through things like that to see what the best fit is for you, and then we start looking. Essentially, I start a search for you, and then any property you see that comes up on the market, we go and we physically take a look at, because that is a very important key too, is physically looking at places. Pictures tell one story, but physically being in it and seeing the size of it changes your perspective a whole lot. Sometimes you could see pictures and it may seem small and not so, might not fit, but if we just go have a quick look, maybe that can help. And it's happened before where it helps change your mind. Or sometimes the pictures just don't do justice to some things, and we need to see that in person and see how big of a place it actually is. So as we're looking at places, I point out things that you should be looking for in a home, major things, making sure the updates have been done, making sure they're done somewhat correct at least, and the overall maintenance of the house, and that's priced, it's priced competitively, right? Right now we're in a low inventory market, so prices are a touch higher, but if there's opportunity to negotiate, for sure we're doing that, right? So that's where the next one is, and we offer negotiate. So we look at a place, and if it's something that fits you and it's something you can see yourself living in, then we do write up an offer. And because most of us, if you're here in this webinar, good chance you've never written an offer before, and there's quite a lot that goes into it, and it's different per house. Like any property is going to have a different offer on it, just because there's different things on each property. So I walk you through the whole contract so you know exactly what you're signing before we do anything. And then we negotiate if there's room for it. Sometimes, again, with low inventory market, we don't have that much negotiating power, but if there's a chance for me to do it, I 100% will do that. If we do come together with an agreement where we make it an accepted offer where both seller and yourself are happy with the price, then we get an accepted offer and we start the conditions period. Usually conditions, the main two are financing, because we still have to get the full financial approval now, and a home inspection. I don't recommend buying a house without a home inspection, but I'll touch on that further in this webinar. And then if you're buying a condo, then there is also a condo review you want to take care of. Make sure the condo is run properly. So all those things go together. If you're satisfied with all of those things and we're good, we go ahead and we remove those conditions and make it a firm sale of the house. So basically the house is now yours. We are just waiting for possession day, whether that's a week, couple weeks, sorry, a month, 2 months, whatever the situation is with the sellers. But during that time of waiting for the possession day, you meet up with a lawyer, you sign all the documents to transfer the title of the home into your name, get the mortgage processed over into your name, all that stuff. And then on possession date, I go pick up the keys. I meet you at your new home. We do a thorough walkthrough to make sure everything is good and as it was when we first looked at it and had the home inspection. As long as everything's good, you are now a proud homeowner. So essentially that's the whole step to it. But again, that's just the basics of it. So you got any questions on it, throw it in the chat. We can talk in the Q&A after this. Book a call with us even if you want, but this is just a very condensed version. It's so much that goes into the buying process. And that's what we're here for, is to guide you on each of these steps as it comes up and what happens with certain situations. Okay, so anyways, from that, we are now going to jump into one of the main topics here, which is going to take up most of the time because that's the biggest thing here, and that's mortgage approval. That's always, like I said, the first step into buying a home. And so we're going to explain what you need, what to look out for, and how it all works together. So the first mistake a lot of buyers make is not getting pre-approval. Now that I shouldn't say what they make now, because it's pretty much, I haven't ran into a buyer now that doesn't have a pre-approval or in the process of getting one, much like you guys. If you've never bought before, we get you started on that. But we don't really typically show houses anymore without a pre-approval because we don't know what you can afford. We don't want to kick people out of their own homes to show something that can't be purchased. And because it's such low inventory anyways, good chances we need to be ready to jump on it once we look at it. Otherwise, good chance it's going to be gone soon. So that's why it's a mistake not getting a pre-approval, because we need to know a lot of those things, range of affordability and to be competitive. So what builds a pre-approval? So there's three full things that need to work together to make a pre-approval. Now, these things will affect how much you can be approved for, but basically it needs to work. All three of these have to work together to make it happen. So the first thing they're going to look for is credit, right? Credit is what lenders look for and how you do with borrowed money. So credit score is one thing. Usually 620 to 650 is a good starting point for credit score. Anything higher is even better. They're also going to look at, how do you do with credit cards? You have a bunch of credit cards. Are they all maxed out? Do you make your payments on time? Do you miss payments? Things like that. Do you have lines of credit? Have you have a car payment? Anything that involves you borrowing money and paying it, they're going to look at to see how you do with that, because they're going to lend you a large sum of money and they need to make sure that you know how to pay it back and do it correctly. So credit's one thing. Income is obviously the second. They need to know, how much do you make, because we need to know how much you can afford, and no, they're not going to max out your income to buy a home. Sorry, I see the question. 620 to 650 is a good starting point for a credit score. That's kind of your baseline there. Anything above that is even better. So income, they're not going to take your full paycheck and use that to give you your pre-approval, because they obviously need to know that they need to make sure you have enough money to still pay for food, gas, bills, things like that to live still. And so that's a question. I'll put that in there again. Thanks for reminding me. And so income, they're going to take all that and they're going to look at your credit, mix that together. So a few things with income. If you are a Canadian citizen, born and raised in Canada, been here for many, many years, they want about 2 years worth of your income tax statements to see a baseline of how much you make. If you work a salary position, we can get a letter from your employer that states this is your salary. You make X amount of dollars and you're guaranteed X amount of hours. That's what they want to see, is to see if you can, how much are you going to make, and are you guaranteed to make that, so we know that you can pay that back and you make the money. Hourly jobs work too. We just need to know again that you are guaranteed a set amount of hours. Now, a bit of a disclaimer when it comes to income, especially for anybody that's new to Canada. We get this actually quite a lot lately, so I do need to touch on it. If anybody's new to Canada, has come in and started a job like Uber, Skip the Dishes, DoorDash, those kind of jobs where you set your own hours, you make your own money. Yes, you make good money doing so. The problem with that, though, is that it is considered self-employment because you are setting your own hours. You can make however much to as little money as you want in it. Lenders can't use that for at least 2 full calendar years of income tax statements because there's no guarantee of hours, right? Yes, you could have had a very great couple months of making money on it, but they can't use that because there's that guarantee of hours is what they really need to see, right? So anything that's considered self-employment, so commission-based jobs, like I said, Uber, Skip the Dishes, things like that, selling cars, selling real estate, anything that gets paid in a commission and no guarantee of a wage can't be used unless you got 2 full years of income tax statements, okay? Exact same thing as if you own your own company, same idea. So if you're looking to buy something right away and you're doing one of those jobs, not saying you have to, but if you're looking to get in as quick as you can, then we would need to have some sort of income that's guaranteed pay in hours. So those are some things to look for income, okay? But back to the rest of it, that's what they need to see to make that work. And then the third and final thing to make this all come together is the down payment, which can be the other big part of this. So the down payment for buying a home, you're looking at 5% of the purchase price as minimum for a down payment. Okay, there's 3 to 4 ways of using a down payment, and that's what we can use, at least in Saskatchewan. There's really not much for programs. There is one first-time home buyer program for a down payment, but the first way of getting it is the most common way, which is through your own savings, obviously. Second way of getting a down payment is using the RRSP first-time home buyers program. That allows any purchaser to take out up to $35,000 of RRSPs per borrower to use as down payment. The only thing is you do have to start paying that back in installments over and over until it paid back into it, right? So you're basically borrowing it from your own retirement and then putting it back in. If you are considering using that program, please reach out to whoever your RRSPs are through to make sure you can use it for that. And they'll go over all the stipulations of what you have to do with it to use it, but it is a good program to use. The third way is what we like to call the bank of mom and dad or immediate family member. You can use gifted money as a down payment, as long as it's from mom and dad, grandparents, brother, sister. Immediate family members can sign a letter stating this is a gift for a down payment. That can be used. It's been used quite often lately. So that is another option. The fourth way of getting a down payment, this one is very exclusive though. If you're a part of the Métis Society of Saskatchewan, they do have a first-time home buyers grant where they give you up to $15,000 for a down payment, plus some closing costs they cover as well. If anybody here is with the Métis Society, let me know. I can get you some good information on it and who to contact to get it, at least the process started, because it does take a bit of time to get that going. So it's best to jump on that if you can use that. So that's kind of the 3 things that work together. Those 3 things have to all connect to make it work. If credit doesn't work, the income doesn't work, or the down payment isn't there, you don't get the pre-approval, unfortunately. Now, down payment will also affect how much you can be approved for as well. If your credit is solid, if your income is really good, and you could qualify for, let's say, a $400,000 or $500,000 house based on those 2, but your down payment is, let's say, $10,000 to $15,000, that will cap you at a certain amount, a lot lower than what you could be approved for, just because you only have a limited amount of down payment. Okay, so a lot of factors are into this. Like Ryan mentioned earlier, though, everybody's different. Everybody has their own set of circumstances. So it's best just to reach out and see what your personal situation looks like to see what we can do. Use that booking link. We're happy. Thank you for the people that have already started to book. Look forward to talking about that, but that is the best way to figure out what you can do. The other thing that can help for a pre-approval is if you have children and you collect child tax benefits from the government. that is technically used as income as well. So if you have children with child tax benefits, that can be used to boost up your income as well. Okay. The nice thing about mortgage approval though is it goes to the underwriters from the lenders, but they review your income, they review your credit, they review your down payment source. But the beauty of it is that it's reliable and it tells us that maximum qualifying amount, so we know what range you can shop it. Again, that is the biggest thing, and that it shows the sellers that when we write an offer that they have a pre-approval in place, they got their financing set up. Unless there's something that wasn't disclosed or they find out about, you are good to go. So that is very helpful when it comes to writing an offer, especially in this situation. Now, this next part has also come up a little bit. I think actually Ryan and I are working with a buyer currently. They're about to close at the end of the month, but they are using mom and dad as a co-signer. And so we've had that asked quite a few times, that if you can't get pre-approved on your own, or you want a bit higher of a pre-approval, sometimes getting an immediate family member to co-sign for you can be another strategy to use. As long as, again, they are an immediate family member, they can be, and as long as they are a Canadian citizen, permanent resident, whatever, they can still be a co-signer for you. They just need to be able to qualify for the mortgage as well. But there are some risks to it. It's mostly there's a risk to the person that's co-signing with you, that if you don't make the payments for your mortgage, they're going to come after your family member. So we got to make sure everybody's on board, everybody's okay with the whole situation. But they're only committed to being a co-signer for you as long as you can't be approved on your own. But once you get your finances in place and you can be approved on your own, then you can go about getting them off the title of your home, off of everything. So it's just yours, you're free and clear of them. There are some extra costs to that after the fact. Buying a house, there's no extra cost to it. It's the same as when you buy a house on your own. The extra cost comes from the lawyers at the end. When you want to take your co-signers off, there's legal fees to do that. I think the last I talked to a lawyer is anywhere from roughly the $700 range. So it's not the cheapest, but it's also not the most expensive for lawyer fees either. But that's the cost to get them off. But once they're off, you're free to do what you want with your house, sell it whenever you feel like. You don't have to worry about them signing things and agreeing to things, right? It's all yours. So that's another option. If that's something you're thinking about using, definitely talk to us. Give Ryan a shout. He'll be able to let you know the pros and cons of it, and if it's going to help out at all or not. Okay. But speaking of this too, I've mentioned a lot of times here, new to Canada. So if anybody's new to Canada, there's some stipulations to what it takes to buy, but I'm going to let Ryan run over that so he can tell anybody who's come to Canada or is fresh to Canada what they need and how soon they can actually buy a house in as little as 6 months. Okay. So Ryan, this is all yours.
Well, thanks, Andy. Yeah, one of the biggest segments of the first-time home buyer market is absolutely that new to Canada group, and it's actually one of the largest drivers of the economy here in Canada. It's one of the biggest drivers of housing growth, and just to let you know, kind of the last numbers that we heard were about 1 million to 1.5 million new immigrants that were coming to Canada each year over the last 2 or 3 years. So that number is growing, and we're expecting that to continue as we go forward. So, it is one of the biggest contributing factors to us seeing a little bit of a housing shortage is we do have quite a few new people coming into Canada, and the rate that houses are being built is a little bit slower than that amount. So that's kind of what we're dealing with as well. But our government and most banks and lenders do realize this as well. And they've really specifically designed programs to tailor to our new immigrant friends. It's called the New to Canada programs. Now, these programs realize that most of our newcomers will be fairly new to their jobs, may not have had the chance to develop a lot of credit here in Canada yet. This program really is tailored to those needs and to have those needs in mind. So as you can see on the slide here, the typical new to Canada borrower will have immigrated to Canada within the last 5 years. Okay, so this is not somebody that's been in Canada for 10 years already. This is somebody that is fairly new to the country. So once somebody has been in Canada for a number of years already, they would likely have already built up a good Canadian credit history and would qualify under traditional borrower guidelines. So this program really doesn't apply to them. The applicant will also have to either be in Canada on a permanent residency status or have a valid work permit with at least 183 days left on it. So if you are new to Canada on a valid work permit, check to see when that expiry date of that work permit is, because it has to be at least 183 days out from the possession of the home. Okay. Unfortunately, the one thing that does not work with this program is anybody that's here on a student visa. So if you come to Canada and you're studying at, maybe the U of S or the U of R, unfortunately, this program will not work. We cannot use anybody on a student visa. You do have to be here on permanent residency or on a valid work permit. Now, when looking at the income and employment, as Andy mentioned, the three pillars are credit, down payment, and income. So we're going to cover a lot of those here in the New to Canada program specifically. When looking at the income and employment for a New to Canada borrower, their income is really looked at exactly like a normal borrower would be in Canada. There is a little bit of exception to that. They do have to have a requirement that they do have at least a minimum of 3 months of full-time employment in Canada. Okay. The exception to that rule would be if they had been transferred or relocated with their parent company to Canada from within the same company from another country. Now, one key highlight here as well is that the applicants must be paying income taxes in Canada to qualify. So, if you're working for, maybe yourself, or you're working for a company from overseas, if you come over here from another country and you're working remotely with that same company, but you're not paying taxes here yet in Canada, unfortunately, that doesn't work. We do need to be paying income taxes in Canada. Their income taxes can't be from the country where they're paying their income taxes somewhere else. Please be sure, as Andy mentioned, this is really, really important. Watch out for employments that are on things like an expiring term contract, or for applicants that are self-employed. As Andy mentioned, things like Uber and DoorDash and Skip the Dishes, things like that, they are considered to be self-employment. You do set your own hours, and taxes are not typically taken off at the source. So, if you're on one of those incomes, we do need a 2-year history to be able to consider those kinds of incomes. So watch out for that, when you are talking to us here. I'll get you to flip over to slide number 2 here, Andy, and we'll talk a little bit about the credit requirements, that pillar number 2. So for credit requirements, as mentioned, the New to Canada program does take into account that the fact that most borrowers are fairly new to the country and don't have a lot of Canadian credit established yet. However, we do still need to come up with some sort of a system that does ensure to our mortgage lenders that you are a good credit risk. So it's not like they can just say, you know what, we're going to take your word for it. They do have some methods that we can, use to get some sort of gauge as to if you are a good credit risk or not. So if you have immigrated to Canada within the last 12 months, typically with most lenders, you do have to have a minimum of a 10% down payment. We do have some options that have come around recently that 5% is still an option for anybody that's within that 6 to 12 month window, but we do need to establish some credit history there. So what is used for credit strength in these cases is typically 6 months of your primary Canadian bank account. So if you have shown up from another country and you go to one of our wonderful big banks here in Canada and you set up a checking account, what they're going to do is they're going to look at the last 6 months history of your bank statements. And as long as there are no missed payments or overages, things like that, you are considered a good credit risk. That is one of the options that we can use to establish a credit history, as a 6-month look at your bank statements. Okay. Now, once you have been in Canada for over 12 months, there's a few different options there as well. Automatically, with most lenders, right away, you will qualify for that 5% minimum down payment, which is the standard here in Canada. And then what they use for credit establishment is that we show at least 12 months of good repayment on your home rental. So if you're renting a house, and you pay rent to that landlord, what we're typically going to get is a letter from that landlord, and have a look at either a rental statement or your bank statements to show that that rent was paid on time for 12 months. Another ways that we can establish credit for you is to have a look at any sort of a structured payments, like a bill, a Sask power bill, a Sask energy account, a cable bill with Shaw Cable or SaskTel, a car plate with SGI, anything that's got a structured payment for at least 12 months, we can look and make sure that that payment has been made on time for 12 months, and that can be used as credit history as well. So as you can see, it doesn't have to be a Visa card or a line of credit or anything like that. Those are great if you have them, but we do have other options that we can use to establish a good credit rating and good credit history for you very quickly based on other means. So the New to Canada program is really designed to look at alternatives to what would be considered a normal credit history. Okay, buddy, slide number 3. The last pillar that we're going to talk about tonight, of course, is that down payment piece. So we do have to make sure that we do have that minimum 5% down payment. That's a big one. Now, if you have been in Canada for less than 12 months, one of the options, most of our lenders have a program that is got at least, so if you've been here at least 6 to 12 months, they usually want some sort of a down payment in the 10% range. Now, if we can establish a good credit history for you, we do have options that we can sometimes get that to 5% through CMHC. So we do have options to get to 5. Typically, if you've been here within that 6 to 12 month window, they do want a little bit of credit strength, and usually that 10% down payment may be required. So keep an eye out for that. Really, as Andy and I mentioned, each situation is going to be very unique and very different to you. So when Andy posts that booking link in there, click it. Let's have a one-on-one conversation with you specifically, go over your situation, find out how long you've been in Canada, what you do have established, how your down payment looks, and we can make sure that we get you all those requirements to get you ready to buy that home as quickly as we can. Okay, now the sources of some of these down payments, as you can see on the screen there, down payment can come from a few different sources. The big one, of course, is going to be your own resources. So savings that you've either brought over with you from your country of origin when you did immigrate in and put it into a Canadian bank account. The funds do have to be able to be tracked for at least 90 days, which is 3 months. So we are going to look at your Canadian bank accounts. Those do have to be in there. We do want to see that, it has landed in your account. Lots of lenders do require that for new to Canada, that there is a 90-day window of the funds being in a Canadian bank. So as soon as you can bring those funds over, please do so. Don't, wait. I know that there are some countries out there that do charge to move money out of that country and into Canada. That charge is going to be there regardless of if you do it now or in 3 months from now. So unfortunately, sometimes you just have to kind of bite that bullet, and we really want to make sure that the funds have been moved into Canada, have landed into a Canadian bank, and have sat there for at least the 90-day track record, so that we can have a look at that and we don't have any issues when we go to buy a home with the down payment. We want to make sure that it's in there, we've had a look at it, and we've okayed it. Okay. Now, one of the other options that we do have is a gift from an immediate family member. That is also an option that you can use for down payment. So if you have, what I mean by an immediate family member would be a parent, so a mom or dad. If you're maybe older, maybe a child. So if you are maybe in your 40s or 50s and have a child in their 20s or 30s, that would work as well. Of course, brother and sister, siblings do work. Any grandparent or grandchild relationship would also work, or if you are a legal guardian. So it really does have to be an immediate family member that we get gifts from. Those can come from overseas. Those are still allowed, but it does have to be that immediate family member. The big thing with a gift is that, it is a traditional gift. It's not a repayable loan. So, if grandma's going to give you $10,000, she's not expecting you to pay that back. And we would have you sign a letter that does state that intent. So gifts can come from immediate family members. The big thing is that it can't come from a friend of mine who I consider a brother, or Uncle Joe, or my employer, or the neighbor down the street, or anybody like that that might be that one level removed. We do want to ensure the legitimacy of the money coming from that other person. So they do have the requirement that it is an immediate family member. So know that that's an option, but make sure that you are checking with only immediate family members when we are moving that money, for down payment for a gift. So that's just a little snippet of the New to Canada program here. I don't really want to go too much further into it. Like I mentioned, every situation is really unique, especially with that New to Canada stuff. Each country has their own requirements for how money can be moved out. Each job situation is really unique for our New to Canada borrowers as well, and each establishing credit for each borrower can be a little bit of a unique situation as well. So click on that booking link. If you are a New to Canada member, we do have some great programs that can help get you into housing really, really quickly. But we really want to talk to you and make sure that we do iron out all those finer details to make sure that we have you all ready to go for that pre-approval. Perfect. Thanks so much, Andy. Back to you.
Awesome. Thanks again, Ryan. Appreciate all the help with the New to Canada program and everything. There are some questions that were in the chat. I did my best to answer, but if you want to round those out for me, that's probably going to be better.
Sure.
But yeah, so we got one more thing to deal with on the financing thing, then we're going to jump really quickly for a short section on real estate stuff. But one last thing. So I get a lot of this too. It shouldn't really be a mistake using a bank, but there are some issues that come up for using a bank. And I've got lots of people that say, I've used my bank for many, many years. They've treated me very well. I want to stick with them. And that's fine and good. And they're there for you until they're not, to put it bluntly. I've worked with different mortgage brokers from different banks. Some of them can be good. Some of them, a lot of the times it's hard just communication wise. Okay. And I'll go over a little bit of why. Like, banks are great for things like, your checkings and savings accounts, where direct deposits, things like that. Yeah, absolutely. But when it comes to buying a home, you need somebody that is 100% on your side. And that's why a mortgage broker is so much better. And this is exactly why. So the differences between the two and why it's so much better to have somebody on your side. So Ryan has access to over 30 different lenders' products. So he can shop around to find you the best rate and the best programs. Banks are going to be restricted to their in-house product. RBC has their own thing, Scotiabank, CIBC, BMO, whatever. They all have their own thing, right? And it's the one thing. Ryan can shop around to find the best one. Ryan is a lot like I am, works the same hours as me. Real estate, in the whole sense of the word, really doesn't sleep. Most people look at houses and offer on houses on evenings and weekends because they're off work and have the time to do that. So we need somebody who's there and available for us when the banks shut their doors at whatever, 6 o'clock at night. And not just saying this, my dad is the general manager of a credit union. He's been that way since I was born. So I love my dad. I use a lot of my stuff with him, but there's just some things that a mortgage broker just can do a little bit better with, right? So that's why when I'm working with an offer, especially in this limited inventory market where I need a question from Ryan saying, hey, we want to offer on this place. It's a condo. With the price we're offering, with the condo fees, with the taxes, are we good? And 9 times out of 10, Ryan's going to get back to me within right away, or he might be a little bit, but he's still going to get back to me when I need him to. And he's never failed me before, right? Whereas banks, if I have a question for them at let's 7:43 right now, good chance if I text Ryan, he's going to at least respond to me at some sort. The banks are going to just be non-responsive until tomorrow morning when they open their doors and get their stuff together and then get back to you. But by that time, we could have lost the house already because somebody else got the offer in or whatever, right? So this is why it's another big thing, especially in limited inventory markets. Ryan's going to offer you the best mortgage rate up front, where the banks tend to offer their bank posted rates, and you may need to negotiate a better rate. So here's a little reason why this is a big deal as well. So let's say, just throwing a number out, I am not quoting interest rates. That's more for Ryan to do. I'm just going to use a number really not specific, but let's say 4.9% is what Ryan quotes you. and the bank says, well, we can, you've been with us for years, this will give you a good rate, and it's like 4.95 or 5 on the nose, right? So it's 0.05 or 0.1 difference, which in the short term may not seem like a whole lot, and a lot of people will be like, whatever, that's not a big issue, we'll go with our bank because we're used to them. But buying a house is not a short-term thing, it is a long-term investment. So yeah, your payment may be a very minimal amount higher per month, right? But it's maybe, it's not too bad, we're okay with it. But if you stretch it out over 10 years, that's a lot of money. And like, for instance, let's say it's $100 difference a month, right? Over a year, that's $1,200. And not so much, not a big deal. But in 10 years, when you call and say, hey, Andy, I want to list my house, and we sell it, 12,000 of that could have been in your pocket instead of paying into interest. So may not seem like a big deal at the start, but stretching that over time can be a big deal. And I'd rather see you put 12,000 into your pocket to put into a bigger down payment for a nicer house or an upgrade of a house than to just pay it off on interest. Okay, so just keep that in mind with interest rates. Ryan, again, like myself, we work for you and your best interest. We are here to help you with your money, to invest in something smart, and not just to put you into something to put you into something. So we're here to watch your back. We're the mortgage broker at the bank. Yes, they work for you, they're helping you, but they also have to appease their boss, the bank, right? So they kind of have that fine line of, who's what we're going to do here, right? And like I mentioned, you can call Ryan or text him majority any time with any questions. Please don't message Ryan at 2 in the morning unless it's like life or death situation. Okay. But if you message him in the evening because you get off work, and chances are Ryan's going to get a hold of you, right? Bank, again, they're closed the same time you get off work. Good luck getting a hold of them. They'll get it back to you tomorrow, and it may be too late by then. One more disclaimer before I get into the real estate side of things. I'm saying mortgage broker, but I'm not also saying just any mortgage broker, okay? Ryan and I worked with a buyer that I had. He was a referral from a past client of ours, but he was using a mortgage broker out in Toronto. He was referred to them out in Toronto. They wanted to use those because they helped their friend out, which is fine. Okay, not a big issue. The big issue was they live in Toronto. They have no idea about Saskatchewan, or let alone anything about Saskatoon, let alone the real estate market. They have no clue about it. So I probably wrote many offers with this guy. We got 3 offers accepted and worked on, but they all fell through because this mortgage broker in Toronto just didn't know enough about it and wasn't able to make things happen. They were panicking about little things that were a non-issue, but because they don't know anything over here compared to there, it wrecked all the deals. So after the 3rd one fell through, I said, Ryan, you need to have a conversation with this guy. I told my guy, you need to have a conversation with Ryan. I connected them together, and the first place we offered and got accepted on, it went the whole distance because Ryan knows what he's doing, and that's why I work with them. So again, just some things. You are free to use whoever you want. I'm not pinholing you into one thing or anything like that, but I'm just saying from experience, Ryan's going to have your back with this all. He's going to take care of you. And just be worried, or if you want to use your bank or at least talk to your bank because you work with them, fine. But see if Ryan, or tell Ryan what they offered you, and there's a very good chance 9 times out of 10 he's going to be able to beat it. But the nice thing about him too is that if he can't beat it, he's going to let you know too and just say, nope, that's better. Off you go, because that's what we're here for, is to make this good for you. And that's what the important part is. Okay, so I think that round, oh yeah, the one last thing about the bank, sorry, is there are bank penalties if you break your mortgage. So unless you live in it and pay out your mortgage, if you decide to sell your home, which the majority of us do because we don't really stay in the same house, especially your first house, for your entire life. Good chance you're going to upgrade, downgrade, move, whatever. We don't want you being penalized extensively for a change in a lifestyle, right? Bank penalties can be expensive if you're not sure about it. If you're not aware of it, there could be balloon payments, weird things like that. Ryan is going to be upfront with you, show you can have little to no payout penalties. We can't guarantee no payout penalties, but at least you're going to have an idea of what they could be if you go to sell your home and what that looks like. Okay, but I'd rather you put more money in your pocket than the bank's pocket. Okay. Okay, so we touched, holy man, we pretty much ran our whole hour with the mortgage. So I'm gonna touch a little bit on real estate. It goes by pretty quick. It's just a couple things I want to touch on. But if you guys are thinking of getting started, want to get started on the pre-approval, want to speak with us, click that booking link and we're gonna help you out the rest of the way. But for now, I gotta jump into some real estate stuff. So another mistake people make is buying directly from a builder. I don't touch a lot on new builds just because majority of first-time buyers usually buy resale properties, but new builds are getting more and more popular just because of the limited inventory, right? So I will touch a little bit on it. Going directly to a builder is about the same as going to the bank. They're going to sell their product and their product alone, and they're kind of there to make sure their stuff sells. I'm there to make sure that what you're buying fits you guys, is a good quality build, and somebody that can negotiate for you. Okay, that's the big thing. I can show you different options in different new builds, plus I can show you options in resale that may be a better fit. Okay. Now, the difference between buying a new build and buying a resale home is we don't typically are able to negotiate purchase price on a new build, simply because most builders buy a block and build a whole bunch of houses on that block. If they all price them the exact same house down the block, the first one is priced at, let's say, 400,000. If I was to go in and offer them 395 and they accept it, the next house, they're going to see that sold for 395. So the next one's going to try and negotiate, maybe go 390, and so on and so on and so on and so on until the house at the very end is now worth 350. So they're going to lose a lot of money by doing that. So they stick firm to their price. You're buying brand new, you're going to pay a brand new price on it. But what I can negotiate for you is add-ons, right? A lot of new builds don't come with a lot of things. Basements are unfinished. Some don't come with appliances. Some don't come with air conditioners or landscaping or decks or whatever it is, depending on the build. But if you want something in there, as long as we can make it work with the price, I can negotiate some of that in there, or at least if not all of it, at least a chunk of it off, right? So if there's no appliances, I can say, hey, throw an appliance package for these guys. And if they say, well, we can't do that, at least I can try and cut it in half or make it more feasible for you. Same with throwing an air conditioner in or having them put a back deck on, or at least lowering the cost of add-ons, right? That's some things I will still do for you to help at least save you money on something in there. Plus I can get you the good numbers to a lot of different contractors that can help make finishing the basement and landscaping and fences and all that cheaper and done very well. So the cost of buying from a builder, there's no difference because they build the commissions and things like that into the purchase price. So there's no difference in it. But what you are losing is knowledge of different products and negotiating on your behalf against them. You don't want to work and try to work with them against them. You want somebody that's going to work for you against the builders. So that's, again, things that I do for you. That's pretty much, I could go on for a bit more with build, but we don't have a lot of time, and each build and builder is different. So if you're interested in new builds, let me know. We can go check out some places and get an idea of that. Okay. So the next thing, I know I've been rambling on for a while. We are running a little low on time, but I love asking this question every single time. I want to see the chat kind of go up a little bit for me here, but does anybody know what the cost, roughly the cost of a home inspection is in Saskatoon? Let's just say a detached house. Throw some numbers at me. I want to see if people are close or not. Just curious. Oh, I like it. Look, we're on the nose today. Okay, so that is pretty close. 500 is a good guess. It's pretty close. My guys do it for anywhere from like 450 plus GST. That's for a detached house with a garage and a basement. If you're buying something with a legal suite, it will be a touch higher because it's technically a second suite in a basement. They got to test pretty much double the stuff. But typically it's 450 plus GST. And then if you buy a duplex or a townhouse, it's less. And if you buy an apartment condo, it's like less than $300, I think, because of the limited stuff they have to do. But that's about what it is. And I've had people say, well, that's, it's kind of expensive, but when you're buying a property for, let's say, 2, 3, 4, 500,000, that little investment compared to that is worth every penny. These inspectors, at least the ones that I recommend to use and have worked with and trust and know they do good work, they don't miss a thing in these houses. From top to bottom, they check everything. As physically possible as they can without actually opening up walls. They can't do that. They can't be intrusive, but what they can see and use and the technology they have is crazy. And you get a thick book of not just what's wrong with the house, things to maintain, just like buying a car, what you got to do for maintenance. This is what you do here. This is what you do with this. And you can call them and ask them more things. You can call and ask me more things with your house too, but it is worth every penny. Okay, so a couple things we're going to look for. Well, sorry, for the nice thing for a home inspection though is when it's in an offer, it is a condition. It has to be satisfied for you to proceed with the sale. So if the home inspection comes back truly awful, like there's some major issues, you can just simply walk away from the house and go find something else. You're fine. If it's, but there can also be fixes that can be done that we can negotiate after the fact. So if it's done, we can negotiate them to either fix it and have it fixed professionally before you move in, or knocks them off the purchase price so you can take care of it. And then in some cases where the sellers are refusing to fix anything, then it's kind of in your hands whether you want to go through with it or not. Okay, but I am going to try to do my best to negotiate for you to get out of the fixes fixed, or at least knocks them off the purchase price to help you out. So a couple things to look for. This is kind of what we're looking at with a home inspection. This is kind of part of very little of what they give you. Their books can be anywhere from 60 some pages long. Okay, but these are a couple pages of things. On the left, he is using his infrared camera, his thermal imaging camera to make sure the insulation is there. There's no cold spots. There's no weird hot spots. There's no wet spots. So they check through all the walls, the attic, everywhere to make sure the insulation is good. Right on the right hand side, he's checking the electrical box, make sure the breakers are good, make sure there's no issues with the electrical that could start a fire. Right, that's the main thing we're looking for. Then on the bottom, he's checking all the plumbing. So he's checking all the faucets, the taps, the toilets, the sinks. And in the very small bottom right there, he's showing me that there's a leak under the sink. You can kind of see a blue line there. Hard to see because it's a small picture, but there's a leak under there. There was water there. And he's showing that there is a leak from that. So that's things that we asked for to get fixed. So again, checks everything. He'll also check the furnace because that's a major component of the house. You need a furnace in Canada in these Canadian winters. He's going to open it up, check everything, make sure it's all good, make sure the burners are working, the fans are working, it's clean, whatever, and make recommendations on what you need to do to maintain it. And then, of course, he's going to check all the appliances in the house to make sure they're functioning at the time that he checked them. Appliances are a bit more difficult because they are an appliance or a used product. They could be working today but gone tomorrow, and they're not really detrimental to the house. The furnace is, the water heater is, the electrical is, but appliances not really. So if it's not working a few days after your possession, like most of the things, it is what it is, right? But they're at least going to check them to make sure they're functioning at the time. And that's just the minimum stuff they look at. They're going to look at every electrical plug in the house, the foundation, the roof, the shingles. They're going to drone over the house to make sure the shingles are good. Check the exterior, the eaves troughs, the siding, the garage. Every single thing about the house they're going to check. They literally don't miss a thing. That's why it takes them hours to do an inspection. Okay, so very important. If you do not get a home inspection or choose against it, if you're buying a new build and say, I don't want a home inspection, I still recommend it even on a brand new build, because builders can miss things, maybe miss connecting a vent line, maybe miss an electrical thing, whatever. They can miss something, and it's good to know that so they can go in and fix it. But if you do skip one or say I don't want one, I will get that in writing, because there's so many things that can go wrong with a house if you don't know about it. Could be mold, could be infestation, could be a cracked foundation, could be a leaking roof full of water damage. If you don't have somebody look and don't know what to look for, it could cost you tens of thousands of dollars. So we're here to protect your money. We want to get that $500 home inspection done because it's worth every single penny. Okay, so that's a big thing. If you guys got questions, we're just one more thing left and we'll hit the Q&A. So the last little bit I want to touch on is the condo review. Much like the home inspection, I don't recommend not getting this reviewed by a lawyer. Okay, I know what's in condo review documents. It's called an estoppel. It is mandatory that you get a copy of it when you go to purchase a home. It is a built-in condition. It's just not mandatory to get a lawyer to review it, but you're paying a lawyer to buy the house. You're paying them to do the closing costs. Might as well get them to put the condo review in, because most lawyers that I work with usually just throw that in for you anyways, as long as you go through the whole process with them. But a lot of things to look for with this condo review that's going to save you money is the biggest one is the reserve fund. That shows you how much the condo has saved up for any fixes in the future. So fixing a roof, siding, concrete, asphalt, landscaping, boilers, whatever they got to fix, they need to dip into the reserve fund to fix that. If they don't have a healthy reserve fund and they have lacking of funds in there, they do what's called a cash call. And a cash call is not a good thing to hear when you're a condo owner, because that means they're going to come to each unit owner and ask them for a chunk of money to help fix the problem because they don't have a good reserve fund. We don't want you having to fork out $1,000 or $2,000 or $3,000 to fix something that they should have had the budget for. Okay, so we need a lawyer to review the reserve fund study. They get a study every couple of years to make sure it's compliant and it's audited, and that the correct amount of condo fees are going towards the reserve fund and the maintenance fund and all that. They're going to look at all that to make sure it's good, make sure that the property is run professionally and well, and there's no red flags. But it's also going to tell you the bylaws of the condo. So what you can and can't do in your unit, right? Especially when it comes to things like renovations. Apartment style condos, some have bylaws stating you can't put hardwood or laminate flooring in the living areas of your condo. It has to be carpet and carpet only, just to keep that sound barrier from you and the person living below you. So we don't want you to go in, rip all that out, put your laminate flooring in because it looks nice. But now they're going to find out, they're going to fine you, and you have to rip it out and put new flooring back in the flooring that you've already replaced. So it's just going to cost you more money. So it's good to review that, make sure the bylaws are good. And then we want to make sure that what's being fixed is going to get fixed and that they have the correct amount of money to fix it, right? What their future plans are to fix things, what has been fixed and what's costed them money before, and just make sure that everything's healthy and good, okay? Because that there is going to save you, again, upwards to a couple thousand to tens of thousands, depending on the situation, right? We don't want you getting a cash call. We want to make sure the condo you're buying is safe and secure and it's not in a whole bunch of disrepair, and that the condo fees are correct and they're going to where they're supposed to be. Same thing with this though. If it doesn't look good or the condo has a big red flag on it and the lawyer says don't buy this place, which has happened before, then you walk away and you go find something else. It is what it is. It's part of the conditions, right? We want you to buy something you are comfortable with. Okay, so really the biggest thing that we want to hammer home here, this is pretty much wrapped up now, but what we really want to hammer home is that we're here to help you out every step of the way. Every simple little thing that comes up, we're here to help with. We want to make sure that your money is being invested correctly and that we protect your money to make sure it's going somewhere. We don't want to just put you into something to put you into something. I know it may feel chaotic because of the lack of inventory, but we still have a chance to sit back, breathe, make that informed decision, and we're here to help answer any questions you have because this is just what we do. Okay. So we are at the very end of it. For everybody that stayed along for it, I do appreciate everything that you guys stayed with me. I hope that we've at least helped a little bit of this to make you feel less anxious about this whole thing. If we haven't, I guess that's on me, but here, how about book a call with us and we'll go over what we didn't be able to help you with, or what more we can help you with in the meantime. And so this is what it's going to look like when you go to click that booking link. It'll bring up a calendar that all the available time and dates. Click one, I'm there. We'll have that one-on-one conversation, see what we need to do, whether it's we can go now or it may be a plan for the future. Okay. Whatever it is, whether it's you're ready to buy tomorrow, whether you're ready to buy in a year from now, it doesn't matter how long. It's just know that we're here to help until you are ready to go, and then it's game on. Okay. So again, thanks for everybody. We are going to start rolling into basically the current market conditions in a Q&A session. So this is where I like to kind of hand it a bit back to Ryan so I can give myself a break here, but look back and see. I do see an inspection question, so I want to kind of, oh, never mind. Ryan caught that on me here. Yeah, is it okay? No problem. Then when I moved in there's an issue. Like, yeah. So the problem with that, that inspectors do have insurance, same as we do as realtors. They have errors and omission insurance. So if they do miss something, they can be held liable for it and things like that. Again, though, the people that I recommend, I've used them for years. They've never let me down yet. Not saying they won't ever, but they haven't yet so far. And I've been using them forever. But it would have to be pretty significant to me. And like, yeah, I've never had it happen before, but issues do pop up in houses, and it comes down to the fact of whether or not you can prove they knew it or knew about it prior to you buying it, and that's where it gets a little sticky. So yeah. I appreciate everybody. So yeah, we're here. Ryan and I are going to stick around for as long as you want. Throw some questions out there. We're happy to answer anything unless we've covered it all for you guys. But here, I'm going to put this in here. So for everybody, again, all the links here. So this is the booking link again. It's going to be my direct email address. And phone number and that link tree again. So all my information's on there. But the booking link is going to be the biggest one to use still. So anyways, Ryan, I'm going to pass it on to you. See if I missed anything.
No, I think you knocked this one out of the park, Andy. I mean, we got some great questions that have come through. Lots of stuff on new to Canada. I appreciate you jumping in on that inspection question as well. Really everything from down payment requirements to what do you think about this kind of income to credit. You guys have done a fantastic job of asking some amazing questions. Keep them going. We're going to be here for a little while here longer. I think we're only about 5 after 8 here now, so we will hang on if there are some further questions still to come through. The big thing is as we mentioned, each situation is so unique. Whether you're coming from a different country, depending on your job, there's so many different types of job positions out there, self-employed and short-term contracts, and commission sales and salary jobs and part-time jobs, and is your down payment coming from a family member? Do you have it in a savings account? Is it in an RSP? Each situation is so unique and so different. So that's really why we wanted to give you a really broad, a broad kind of view at everything on the process end, and then really encourage you to click on that booking link. Let's talk to you one-on-one. Let Andy and I have that that direct contact with you and ask you about your unique situation so we can properly make sure that we tailor the mortgage directly to your needs. So that's really our goal is to be able to speak to you one-on-one, to be able to get that pre-approval with your specific situation in mind, and make sure that we do kind of uncover every rock, have a look at all the big things on the said, especially the three pillars: the income, the credit, and the down payment, to make sure that we're all satisfied there, just to make sure that we give you the best chance that we can to get that mortgage approved. So click on that booking link and keep those questions coming, guys. How are you feeling, Andy? Did you notice anything in there that that you wanted to touch on a little further? I think that was kind of all that I had. One of the questions that we've got, and this is kind of a good one. Ideally, you just mentioned a great question here. I just wanted to talk to just specifically to that. Can monies tied to termed products in a TFSA be used for down payment? And I'm thinking what you mean is those investments are likely in a locked-in GIC underneath that TFSA umbrella. The big thing with locked-in or termed investments is they typically are locked in for a certain amount of time. Now, having said that, most banks will allow you to pull those funds out if you're using it for them for down payment. So you would have to request that with your TFSA provider. So whatever bank that's with, you'd have to request that they release those funds from the locked-in GIC early. Lots of them will. Some of the online ones, like Simply Financial and things like that, they typically don't. They typically hold you in to that term till the end, but most of the major banks will allow you to come out if you're using it for down payment. Just make sure that you do okay that with them before you tell us that you're using a TFSA for down payment, just to make sure that we don't get all the way to the end and find out, oh crap, I couldn't pull that out. So really check with your bank first to ensure that you can pull that out early before the term is up. Now, the other side of that is what will there be penalties to pay? Typically, what happens is you lose your interest. So if it's locked in for a 1 or 2 year GIC, you would typically just get your initial investment back because you're pulling it out before the term is up. So you would typically just lose the interest portion of what you put in there. So if you are looking at, if it's kind of something that you're looking at putting in for the future, but you're looking at a down payment as well, put it into something that you can remove easily, like a mutual fund or just a straight a cash account within that TFSA. Don't lock it into a GIC if you're planning on pulling that out very quickly for down payment. But if it's already in there, check with your bank, check to see that you can pull it out early and get the confirmation before you go ahead. Hopefully that answers that question. Now, just to kind of take that a little further, one of the questions that I got early was about RSP providers and lenders and things like that. Now we have some amazing banks in Canada. Canada has one of the strongest banking systems in the world. We do have, of course, our major five banks, but there are many other banks other than the big five that do things like bank accounts. There's online accounts. There is RSPs that you can put money into and pull out. You can put them into TFSAs with your tax-free savings accounts and pull them out quite easily. One of the new things that has come around quite recently, this is over the last year, is called the First Home Savings Account. It's called an FHSA. It's kind of along the same lines of the RSP umbrella or the TFSA umbrella. It's called a First Home Savings Account. And I actually recommend putting money into that first, because that account has the same benefits as both the RSP account and the TFSA account. So you get to take the tax deduction like you normally would on an RSP, but you also get the tax-free any interest that generates, or any investment interest that generates off of that investment is also tax-free, like a tax-free savings account. So the First Home Savings Account is typically your best bang for your buck because it does do both. After that, I would say likely the short term, the RSP, you do get for a first time home buyer, you do get the tax deduction, but you do have to repay that money back into that RSP over the next 15 years. So know that just because you pull money out of your RSP to use for down payment, in order for that money to stay tax free, you do have to put money back into that equal amount back into your RSP, 1/15 for the next 15 years to keep that money tax free. So keep that in mind when you're looking at RSPs as well. Now, I am not a banker. I don't work for a bank. I actually am a mortgage broker. I work for many different lenders. I have many different lenders at my disposal, but I work for you. I don't work for a bank. I'm not paid a salary. I work for you. I get you the best deals, the best rates, and the best products that I can across the open market. So I do deal with many banks and many mortgage lenders, and that's really the advantage of what I do. So I'm not working for the bank. I don't work in the bank's best interest. I work for you specifically to get you the best deal. So bankers typically play games with the rate to get you to sign as high as they can. I will offer you my best rate right out of the gate. So yeah, I think we've that kind of covers the banking TFSA stuff. Let's see what we got for questions coming in here. Lots of thank yous. Yeah, thank you so much. Well, you're very welcome, Pawandeep. Thank you so much for joining us. Taryn Preet, thank you so much for joining us tonight. We look forward to speaking with you as well. Just got another message from Manti. Thank you very much. You bet, guys. This is what we're here for, is to really walk beside you all the way through this journey. It can be a lot. It can be a little bit of an overwhelming experience. As Andy mentioned, buying a house is going to be the largest thing that you own typically in your lifetime, and the mortgage will typically be the largest debt that you do accumulating in your lifetime. So there can be a lot to it. And sometimes, just having a pair of friends like Andy and I that are here to walk with you all the way through the journey and point out things to make sure that you're ready, to watch out for on the home inspection, to make sure that we set the mortgage up properly, making sure that we look at the income and down payment, make sure that we get you all ready there. We will go through all the process on meeting with the lawyer, meeting with the home inspector. We're here to organize and help and walk you through that entire process. One of the things that I will finish up with, and this is kind of really coming to light lately with rates being a hot topic on the market. The rate is not the number one thing that you need to worry about with your mortgage. Just to let you know the difference between a 5.25 and a 5% rate, it seems like a big difference on the number. It's the difference of about $11 a month on your mortgage. So it's really not a huge difference at all. Making sure that you get into a product that does not have hidden costs or fees, making sure you get into a product that does not hold you long term or have a large penalty, things like that. If you do happen to break, these are just as important. So when you're talking about your mortgage needs, each mortgage is different. We want to make sure that we tailor the mortgage to you individually, and making sure that we're covering you not only on the front end with some great rates, but making sure that we cover you all the way through that the lifetime of your mortgage, to make sure that you don't have any issues as you go forward. So rate is definitely important. We're going to get you the lowest rate option that we can, but know that there are many factors that we put in when we're designing your mortgage for you. So just got a question from Pamela. Is there a minimum or maximum mortgage interest rate? Unfortunately, there aren't any minimums or maximums, Pamela. It really follows the market. So right now, realistically, rates are kind of right around just under 5%. We're expecting them to slowly come down over the next year and a half, and stabilize kind of right in that 4.5 range. But again, as I mentioned, not a dramatic difference really between a 4.5 and a 5% rate. Not a huge difference on your mortgage. So, if one of the biggest questions that I do get is, should I outweight rates and wait to buy a home? And the answer is absolutely not. You're going to typically be paying rent to a landlord in the neighborhood of $1,200 or $1,500 or $2,000 a month. That's money that you're giving away each month. So over a year, we'll take a year if you waited a year. So say you paid $2,000 rent for a house in Saskatoon, that would be about $24,000 a year that would be gone. Okay, so that you're paying right out. Now that same house that you may have looked at today, if you waited a year, might be $10,000 or $20,000 more expensive in a year as well, because real estate does appreciate. So we've now looked at $24,000 that you paid in rent and thrown away in rent, and maybe a $20,000 difference in the property. So we're up to $45,000 or $50,000 that could be impacted for you waiting that 1 year. Now, if you're waiting for an interest rate, so let's kind of do the math here. So even say, the rates go from 5% down to 4.75, we're looking at about $11 per 100,000. So even if you say $20 a month on your mortgage payment, that would increase on a slightly higher rate, factored out over 12 months. That is about $240. Factor that out over 5 years, that is just over $1,000. Just over a 5-year term, $1,000 for that rate difference. That's all it is, and you would be giving up almost $45,000 or $50,000 to not get into that same home. So don't worry about the interest rates, guys. They are going to be what they're going to be. I have mortgages as well. I'm locking into the same rates that you are. Sometimes rates are a little bit lower. Sometimes our rates are slightly higher. They do kind of ebb and flow a little bit and go up and down, but they are never going to really be out of normal range. So normal range here in Canada is typically between the 4.5% and 5.5% mark for the 5-year rates here in Canada. So we're right in there. So if we're hearing that rates are high, they might be on the slightly higher end, but they're not that far out of normal. So don't let the interest rate scare you. Let's get you into a home today. Let's see what we have for questions here, guys. Ideally, how would one know if a mortgage offered has hidden fees or terms? They will have to disclose it in your mortgage information. So lots of the online brokerages that are offering these super too good to be true rates, True North, things like that. These are things that they have hidden fees in them. They typically will use lenders that are not major lenders, that can either cost you hidden fees if you lock into their teaser rates. They can lock you in to a much higher rate down the road, things like that. So use a broker that uses the major A lenders in Canada. Don't think that just because somebody has a great rate online that that product is good for you, because it's not. There's typically a lot of hidden costs and fees in there, and it's not about the rate. It's about getting money from you somewhere else. We don't offer those products at all. We would never put you at risk like that. So it's not about the rate. It's about making sure that you are protected. What do we got here? I immigrated in 2002. This is Hamisi. I immigrated in 2022, got a job in 2023. Most of the payments being done with my wife, as I had no credit history in Canada. However, I've been sending her money on a monthly basis to pay the bills. Will this affect my credit history? Consider she's doing all the payments. Um, Honestly, Hamisi, you're likely going to qualify underneath the New to Canada program anyway. What I would recommend is that you do have some sort of a credit card, line of credit, thing, something like that, because you will need a credit score. You do have to have a minimum of a 600 credit score, even if that credit is fairly new. So if you do not have any credit established, go to your bank, get a Visa line of credit, anything at all to get that credit history started and get that score. But again, as we mentioned, with the New to Canada program, we do have some great alternative options. So we would look at things like your bank account and see how your primary bank account was handled. If you've been here over that year mark, we'd look at things like your rental payment history, and if there's a bill, looks like your wife's paying all the bills. So I think that probably we would look at getting maybe a 10% down payment and having a look at your bank account, something like that. But again, let's have a look at your individual situation. I think there's something that we can do for you. But number one, if you have no credit and no credit history and no lines of credit or credit cards, anything, get at least one or two. Get that credit started and get that score moving. Great question. Thank you. Next question. Ideally, is buying a house sufficient cause to terminate a rental lease agreement before term? No. Your lease agreement with your current landlord is a signed agreement. So what we typically recommend is if you are looking to break that lease before the term is up, typically we've been finding most landlords are pretty willing to do that right now, because most rental they're charging right now is lower than I think what they would like. So lots of those guys are offering, they're as long as you go to them and say, hey, we're looking to maybe break the lease a little bit early and move out, they're pretty willing to do that. But check with your landlord and say, you know what, we are looking at maybe buying a house. Can you let me know what would happen, if we do have to move out a little early, and just start the conversation with them, right? Each agreement is going to be different. Each landlord will be different, but it's better to know up front if they are going to hold you to that lease, because then maybe you wait till that lease is up, or if they are a little bit more amicable and going to let you out of that lease, that you would know as well, and you can buy a house whenever you're ready. Okay. On the subject of rates, would you advise a fixed versus a variable? This is a great question. Right now, I'll take a step back. So typically, with variable rates in Canada, they do float up and down with the Bank of Canada with prime rate, and with that floatability does come some inherent risk. So usually variable rates are priced less than the fixed rates because there is risk involved in doing that. Now, there can be some reward if the rates do stay low, or go down. You can typically do quite well with a variable rate. But having said that, once we came out of COVID, rates have spiked and gone from 1.5%, 2% up to 5%. So being in the variable rate was an awful place to be over the last 3 years, and very risky. So right now the variable rate is still priced quite high. The 5-year variable right now is right around the 6% range, whereas most 5-year fixed rates are slightly under 5%, kind of right in that 5.89, 5.79 range. So, 4.79 range at 4.89 range. versus the 6 on the variable. So right now, we've been advising clients that the fixed term is likely going to be the better way to go. Likely into maybe a mid-range term like a 3-year, expecting that rates are going to come down. But again, there are no guarantees with rates. So we're kind of looking at the mid-range. That 3 or 4 year is typically a sweet spot right now. But if you want a little more stability, the 5 year is typically the lowest rate option that we can offer. So fixed rates, I think, are going to probably be the safest bet for a little while, until at least those variable rates do come down into a better range for us. Hopefully that answered your question. Pamela, with regards to locations, are there places that are a relatively safe environment and offer cheaper houses? I might pass this over to my resident real estate expert to answer that question. Andy, you want to grab this one?
Yeah, I was reading it and I was like, I'm waiting for that one. That one's coming my way. But yeah, no, there are. I gotta tread lightly with this one just because as a real estate agent, I'm not allowed to say certain things. That can offset some stuff with property values. However, yes, there are locations that are cheaper, and yes, there are some locations in the city that you can buy very, very cheap and affordable houses, but it may not be in the best areas, right? However, disclaimer with that, I have bought many houses in those areas for other buyers, and a lot of them say they like the area. It's been no issues. It's just all how you make of it, right? But now I know I guess I want to say stigma around it is when people say the west side, right? We all hear it, we know about it. However, and this isn't me being a realtor or anything like that, I typically don't agree with it a lot, right? There are some very nice houses, character houses, not necessarily older houses, but ones from the 70s and in the 80s that are over on the west side, like Dundonald, Confed, those places. Then you get into places like the Hamptons and Kensington, and those west side places offer some really, really nice affordable houses. There has been times when I've looked at houses in the Hamptons that you could buy the same house for in the far east side of Saskatoon for $50,000, $40,000 less because it's in the Hamptons, it's on the west side, right? So there is a lot of times people are missing out on some very good opportunity to buy some nice houses in those areas. They are good areas. I've put families in there and they absolutely love the area. They love the school. They love everything, right? There are, of course, certain areas of the city to maybe not be in, but again, it's personal preferences, right? It's a whole line of personal things, and that's things we can talk about more. But there, I can show you a lot of options, and at the end of the day, it comes down to what you're comfortable with. Okay, that's about as easy and is about as much as I get into it. If I start saying specific areas are a no-go, then that can affect property things, and then I get in some trouble, right? So it's things that we can go over on a more one-on-one basis, right? Hopefully that kind of answered a little bit, but there are lots of good options in all price ranges out there. Another one, so there's an
I think you might as well keep going, Andy. I think these next two are yours too.
So so the reason why obviously they are more expensive than new houses is simply because, long story short, is resale houses are most of the time fully done, right? You could buy an old house, let's say an old house built in 60s, 70s, 80s, but are fully renoed and it's move-in ready. You don't have to touch a thing. It's already got landscaping, fences, trees, basements are fully developed, driveways are all done. Whereas a new build, you're basically starting from the bare minimum. A lot of new builds. Some new builds offer things, but new builds tend to come with the main floor and the upstairs. Depends on the type of house you're buying, right? But the main floor and upstairs are fully done, but may not come with appliances. But majority of them don't come with landscaping in the front or the back. There's no fences done. The basements are fully open and undeveloped. And some, if it's not buying a house with an attached garage, good chances there's no garage put in the back. Or if it does have an attached garage, it's fully empty. There's no insulation or anything like that. So you're basically buying a brand new house, but having to put a lot of money to get it to where some of these older houses that are fully developed are. Okay, just A little bit of an example is there's a new build that I'm purchasing with some buyers. The base price of it was 530, I think was the base price. And again, that's main floor and upstairs. That's it. They put in a legal basement suite. They put in a little bit of couple extra things like a bigger island, appliances, things like that. And they went from 530, they're up to now 640. They added $100,000 worth of upgrades to it, and then it will be almost fully finished. It's still not quite. They still got to put a fence in, landscape the backyard. They still have to what was the other thing? I think front landscaping has to be done too, but it's not quite finished. So they added 100 grand worth of stuff and it's still not going to be done like fully, right? So that's kind of why. But the interest rate itself isn't going to change whether it's new or old, right? That the interest rate is going to be what the interest rate is. It doesn't matter if you're buying a house built in 1912 or 2024. The interest rate is going to be the same, but that's typically why the older resale houses are selling newer. Now, another thing I want to touch on that is I've had a lot of people ask, well, what's your thoughts on buying a house built in the 60s and 70s? And I honestly don't have many issues with those houses. Yeah, they're older. I've owned an old house before. It was built in 1972, I believe is what it was. And that was the first house I ever bought. That house was solid. Like the wind would be howling and it wouldn't move. The thing was, the furnace in that house was still from the 70s when it was built. And that furnace didn't skip a beat, right? These things were built so strong. What we look for with those kind of houses is to make sure if they are renovated top to bottom that they were done well and correct. And the major stuff has been updated, like furnace, water heater, air conditioner. The roof has been done at least recently. How are the windows, and have they been upgraded? So, because those are your big expenses, right? Utilities are your big expense, roofs your big expense, windows are your big expense. So we want to make sure at least some, if not all of those are done, just to help you out, make sure it's a sound house. And then of course you get into things like what kind of wiring is the house, right? And things like that. And it's all things that we can look for in those places, but please don't let the age of the house deter you from looking at them just because of the age. They are still strong houses. They are still have opportunity to do whatever you want with them. So those are a couple things. And then I got here, appreciate it. Is there a way I can ensure the home I buy will be a good investment in the future? Yeah, we can always look at the growth of the area. We look at sale prices, how much is selling in certain areas. Obviously in Saskatoon, it's very common that the east side is always going to be your strongest investment because it's always expanding east. You got Brighton, Aspen Ridge, right? Then you get a little bit of older places that are still very well developed, like Rosewood and Evergreen, things like that. But Brighton and Aspen Ridge and all that is all starting to grow out that way. So if you buy in there, market or property values are going to rise because there's so much being developed in that way, especially in Brighton. That's where a lot of people are buying their new builds because it is just developing so much over there, and it's going to be such a nice area when it's done. So those are things to look for, right? But again, it's all kind of comes down to personal preference, right? But that's kind of where typically your best options are going to be. But of course, you're going to be spending a little bit more money by doing so, being over there, right? So couple things to think about, lots of things that can go into this. It's kind of a person by person, case by case basis, honestly. So
just kind of add on a little bit there, Andy, too. I mean, as far as being a good investment in the future, what you're really meaning there is that the property will continue to appreciate. And we live in one of the most stable markets here in Saskatoon, Saskatchewan, but Saskatoon specifically. We are literally one of the top two stable markets in Canada. Our growth rate is very steady, typically at that 3 to 4% per year, and it grows nice and steady. We don't have a lot of those ups and downs like a Toronto or a Vancouver market. Our market is very stable. We after COVID, we were the only province that had positive appreciation both years after COVID and continuing on. So as far as being a good investment, real estate in Saskatchewan specifically is one of the strongest investments that you'll have in the country. And just to kind of talk a little bit about, so when Andy was talking about the new versus old, also keep in mind that when you're buying, I don't like the word old, I like the word maybe established. Know that the areas as well are very well established. You're going to have, the 7-Eleven down the street. You're going to have trees in the neighborhood. Typically, you're going to have schools that are developed and roads and infrastructure and things that you need in the neighborhood, parks and things that you want for your kids. So, when you're buying in an established area, those things are already there, and there's some great benefit to having those. Whereas lots of these brand new areas, I mean, lots of them still have dirt roads and trucks tracking dirt and construction going on over the place. I live in Stonebridge and we've been here for 10 years now. And the last house on my block was just done last year. So we had trucks and dirt and tracking, for many years. They've just got our schools are now well built and our parks are well designed and the area is finally complete. So know that that our area, Stonebridge, has been around for 20 years. So know that if you are buying something new, it takes many years to get the full amenities and the full appreciation of the area as well. That also has a lot of value. So buying in an established neighborhood, not only are you buying completed property, but you're buying in a completed area. So that also has a lot of value there as well. Perfect. Well, I don't think we have any other questions here, Andy. If we maybe wanted to say goodbye and wrap her up.
Yeah, I think that's good. Yeah, 8:35. I think we'll let people anybody else left to get on with their evening. But yeah, so thanks again, Ryan. Thanks for all the amazing, helpful answers and information for everybody. Thanks everybody who's still kicking around with us. But yeah, I will be sending the recording out, the link out, and everything to you guys tomorrow. If you have any questions, reach out, book a call with us at any time you are ready to go or want to know more information. We are 100% ready and happy to help. So don't hesitate to reach out, even if it's a small, quick question. It doesn't matter. We're here to help. So again, I appreciate it.
Thanks a lot, guys. Have a great night. Take care.
Yeah, on that note, have a great evening, everybody, and we'll talk soon. Thanks again, Ryan. See you guys.
You bet. Good night, Andy.